life insurance illustrations, when I look at an illustration or when I open a policy, when I take a policy out, it often projects numbers that look great. Hey, based on today's dividend environment and where interest rates are going, here's how much money you can expect to have. But then when reality hits, the actual performance is always different and in many cases lower than what I originally purchased, what was bought. Often we see a situation like this occur where I buy a policy, illustration values make me smile. I want to buy that, I'm going to have so much money, and then as the years pass, I see less and less and less in cash value, and there are the actual results. Causes a frown. Part of my poor artwork, you can tell I was not an art major. So some things to considerations is when we take out a policy, we want to make sure that, again, our goal is to maximize cash value within a life insurance policy from start to finish, short-term and long-term. And when you look at a life insurance policy, and in particular, focus what big corporations have done, what they're doing, and look at concrete data, here's what's actually happened, not just a projection, what has always produced the best results. A couple factors here. We have the policy design. If a policy is constructed properly, you will see stronger cash values from start to finish. We have more than enough content on that. The guarantees are good to look at, and this will actually tie right in with the policy design. You'll see the better that it's designed, the policy, meaning less of your money going towards premium, more toward PUAs, the better that design is, believe it or not, the stronger the guarantees are as well. I'll have more money on a guaranteed cash value basis. And then the company selection. You may have heard, company selection doesn't matter as long as the policy is designed the same, it won't matter at the end of the day. And I get that when I hear it. However, when you look at actual data, and again, copying people with the money, what have they done with the money forever? And this is corporations and individuals. What has always produced the strongest results? Because the last thing I want for me, working with you or anyone, is to put a policy in force and then have buyer's remorse occur because you found out, hey, it's not doing what it's supposed to, or I didn't know this item. Why didn't you tell me up front, Steve? That's what we want to prevent. Transparency. So what we have here, this is an older study, but it's interesting. These are illustrated projections and then what actually happened in yellow here. So we've got the total cash value. We're going to circle what was projected at the time. Now, when this policy was put in force, it was 1984. That was going into a span of time when dividends were very high. And then this time period lived well beyond that. This study period here was 20 years. But my point being is, when a projection, when an illustration is shown, it is based off the company's present dividend rate and present insurance expenses at that particular time. So obviously, as the years pass on and dividends went down, we did see lower actual internal rates of return. However, it's good to compare this. So we see projections, and when you look at all of these illustrations, or these illustrated values, IRR represents internal rate of return, your net cash value yield. In what instance is the actual higher? It's not. The projected values were always stronger. Now, policy design, this was not a policy that was designed for optimal cash value. So when we designed them, the ones we've designed today in a lower interest rate environment have still produced strong cash values, and we've got other data on that. But what I want to highlight here is if we rank these different IRRs here, 4 companies over an IRR of 4%. They're all close. At the second 2 are very close to IRR of 5%. The first 2 are above 5%. Now again, this was a study period that's a bit older, but we've seen a lot of consistency with this. And if you've seen any of our videos, you probably know where I'm going with this. But these companies ranked 1, 2, 3, 4. Okay. Let's look at something cool here. So we've got the actual companies disclosed. Who's paid the strongest cash values? That's what I want to know. So again, why don't we do this? But all of these 4 Depending on the time period, we have seen them go back and forth with each other. So it's not to say any one of them are the best hands down. They have kind of like a horse race going back and forth. Look at this. Number 1, Northwestern Mutual. Number 2, Guardian Life. Number 3, Mass Mutual. Number 4, New York Life. Now, I know you've heard me, and not to say I know what you've heard me say, but if you've seen any of our content, I often refer to the big 4, or the 4 major mutual companies. And here's a big reason why. So again, this is based off actual data, and we have much more recent data with policies we put in force and individual policies that were designed in a specific way. Point being, going back to the actual performance, when I set up a policy, I want to make sure that things are designed properly, and I want to make sure it's with one of the companies that is actually going to deliver. So let's look at all this here. We'll go back to our main thing to consider. Policy design. You can design a policy often for maximum cash value with most companies. Some have limits on their premium and PUA allocation, but you can design them for optimal cash. Guarantees. We do want to look at the guarantees. Company selection. What have they actually done? Who's going to produce the strongest cash values? Who has in the past? Who do major banks and corporations use? Which we work with, so we can disclose that information to you as well without providing any banks, names, or anything like that. But who do they use? Because we want to copy them because they have it figured out already. So again, we want to look at the data. We'll always provide the transparency. Feel free to reach out anytime. Hopefully you found this helpful, and we will talk to you in the future. Hey guys, Steve Parisi here. If you enjoyed the content you just saw, please subscribe, like, and hit the notification bell for future videos. If you'd like more information or to see some custom policies for yourself, feel free to call or email our offices at the contact information below.